This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past week or so. Two things really to touch on today. The first around COVID-19 and the second on the Bank of England. Firstly on COVID-19, we've seen over the past week or so an increase in the number of cases in some parts of the United States and an increase in cases in some parts of China. And this is consistent with concerns around a so-called second wave. As economies began to reopen a little bit, you'd see an increase in infection rates. And in fact, if you look at the global chart, it's a chart from Johns Hopkins showing global daily cases, it doesn't really paint a picture of a virus that is somehow under control. You know, the number of global cases is still, broadly speaking, on an upward trend, even if some parts of the global economy are beginning to reopen. And what's interesting about all of this from a financial markets perspective is that financial markets have been relatively relaxed, both about the increasing trend of infections, but also about the fact that we have seen some of this so-called second wave begin to occur in places like California, Arizona, and Florida. Now, that might be because we're continuing to see some signs of progress on treatments and on vaccines. And it might be that we're beginning to see the global economy begin to recover. But in the back of our minds, we also need to consider that perhaps financial markets are still a little bit too relaxed about the speed with which the economy will recover, and also about the impact that the virus might still have. And that brings us to the Bank of England. The Bank of England this week kept interest rates where they were, at a very low level, and also announced that it would increase the amount of bond buying, the amount of financial stimulus that it would do. That was broadly in line with what financial markets had expected. What was interesting, though, is that there was one dissenter. The chief economist of the Bank of England didn't want to increase the amount of stimulus. And there was some indication in the commentary that the bank is seeing early signs that the economic recovery is happening perhaps a little bit quicker than it previously thought. That echoes comments we've seen from elsewhere. We've seen some commentary from Norway on this. We've obviously seen a strong employment report from the US. And so we're continuing to look for signs that the global economy maybe is beginning to heal just that little bit faster than some people had feared. That's very good news. And now, as we look for more things to worry about, one of the concerns may be, if you do see a relatively quick recovery, to what level? How much job destruction, particularly, could there have been as a result of the shutdown? And how quickly will we get back to levels of employment that we saw pre-February? So these are some of the things that we're going to be looking for going forward. We'd like to see continued improvements, obviously, most importantly in the healthcare data, but also signs, indicators that validate that the economic recovery is progressing perhaps a little bit faster than everybody might have guessed a few weeks ago. Thank you very much for joining us. Look forward to speaking to you again soon.